Alright guys, welcome back to the YouTube channel. So this is going to be a quick review and study of Friday's price action. Friday's date was 18 October 2024. So we had this previous day buy side liquidity resting just above here. So this is the 1 hour buy side liquidity. So I really was expecting it to trade to this level here. Remember, as I always say, that just after price takes a buy side liquidity, there is always a potential reversal for price, so you should be very cautious about that. Then we have a bullish fair value gap here. This is a bullish 1 hour bullish fair value gap. Let me address this. Let me annotate this a 1 hour buy side liquidity. So when we go to the lower time frame, we don't miss that. Right, so you see how price comes to this buy side liquidity here, and you see the behavior here. So we call this a mohawk because the body of the candlesticks are not closing above it, just the wicks are painting outside of that buy side liquidity. Same thing here, you have this bullish fair value gap here. You see how the body of the candlesticks are still above that, and this other block here, only the wicks trade outside this bullish fair value gap. That's still a mohawk. We'll discuss about some criteria as why if this wanted to act as inversion fair value gap, right? So we had this other block here. So we had the candlestick painting outside the fair value gap, giving us this wick here, and the body still remains inside of that, right? If also, if this wanted to trade to this buy side liquidity without any significant price reaction from this point here, we would have had expansion to the upside, giving us a bullish fair value gap, then continuation to this buy side, or a straightforward buy side without having this to and fro movement right here, as you can see. Okay, so we can just scale to the 1 minute time frame to see the price action just at this point here. Today we'll be going a bit outside our time window to study a little bit more. So for those that want that flexibility to build a model for themselves outside the time window I'm giving, right? So we had this previous day, this is a previous day buy side liquidity here. So a lot of people call it previous day high, right? But anyhow, trying to make it as simple as possible. So we are all about simplicity right here. Personally, I'm all about simplicity. So 15 minutes time frame. I have a lot of annotations here on the lower time frame, so just a key point so we can talk about some stuff. So you can see the price behavior here, very not clean price action. So this past week has really been a difficult trading week and has been offering a low probability trade setup with our model on US 100. So we really had a whole lot of messy price action right here. So let's go to the 1 minute time frame. So remember, this blue shaded area here is the 1 hour bullish fair value gap, and this green here, the other block from the 1 hour time frame. So just right about here, we had the opening bell coming at this point. This is the 9:30 opening bell here, creating this bearish fair value gap. It's normal to see this as a bearish fair value gap. Then you see it dropping here, bullish fair value gap. Remember, this blue shaded area is a bullish fair value gap from the 1 hour time frame, right? At this point, we're having this candlestick here like this. A lot of people will be seeing it as probably the 1 hour bullish fair value gap wants to trade as inversion because of this characteristic here. But note that this is a mohawk. This is going to be a mohawk if we don't have a bearish fair value gap trading in sync with this. That means if we don't have a bearish fair value gap here at this point, this 1 hour bullish fair value gap is still going to remain bullish and not going to act as inversion fair value gap because we don't have a bearish fair value gap at this point. So if we had a bearish fair value gap expanding to the downside at this point, we we'll trust that price is heavy to the downside and we want to trade off that bearish fair value gap, and we use this from to frame we use this higher time frame 1 hour bullish fair value gap to frame an inversion fair value gap to sell to any closest sell side liquidity. But this here becomes a mohawk when we don't have a bearish fair value gap here. And you see how it takes this, and at this point here, this is just a week in the higher time frame, trading inside this bullish order block here. So this is a sell side liquidity. Sell side liquidity. Sell side liquidity. So in the higher time frame, this is just a week. All this candlestick behavior you're seeing here is just a week after taking a sell side liquidity. Right? So we can anticipate a reversal always after price has taken a sell side liquidity or buy side liquidity, and it would be even more stronger if we don't want to have a reversal at this point, at this sell side liquidity after price has taken a sell side liquidity. If we are not going to have a reversal at that point, price should expand lower, giving us a bearish fair value gap. Right, price should expand lower, giving us a bearish fair value gap. Then we can enter. And also, this and other block here, this up close candle here, this bullish candlestick should act as a bearish order block supporting lower prices. That means there is not going to be any reversal happening at this point. But in this case, that we don't have any bearish fair value gap supporting price lower, then this is going to definitely act as a mohawk. So I framed today buys you saw from this bullish fair value gap here, expansion higher. Once it retraced back to this bullish fair value gap here, right? Let me extend that. This bullish fair value gap here was where I was getting in the buys. Like after it traded out of it, I trusted that it was going for this 1 hour buy side liquidity. 1 hour buy side liquidity just right here. So this was where I took my profit at. I got in another entry just right here, I think below here or here. So let me change this to orange, right? So just at this point, you see how it reversed after taking this buy side liquidity. If this wanted to go higher, I should have created a bullish fair value gap to continue higher at least. So we did not have that. So we can anticipate a reversal from here, as you've seen here. But the price action was a bit messy. So that's just it for the trade in our time window. So in our time window, we'll be looking at this particular price action here at this point. Okay, so we'll be looking at this. So we see how it traded. Made a whole lot of mess at this point. We did not have any close bullish fair value gap to trade to this buy side, 1 minute buy side liquidity here. As you can see, just after tapping that, I would have really wanted to see it expand to this here, but it did not do that. And you see a whole lot of low probability setups this week. So that's why I trade really safe lot size to manage my risks properly. Now, I said we would look at price action a little bit outside the time window. We study together here. Let me take this buy side off to avoid confusion. Now we had price trade back to this buy side liquidity here, right? And you see how this bullish fair value gap failed to hold as a bullish fair value gap, instead broke down, took out this low here. This is a shift in market structure. Then this is a breaker, but I don't really see that as a strong breaker because it does not have a bearish fair value gap that overlaps that. So if this wanted to hold as a really strong breaker for me to act with my full risk measure, we would have had a bearish fair value gap just at this point here, but we did not have any bearish fair value gap here, so I did not trust this to be a breaker that much. I as well was step reading this. So we had this expansion to the downside, giving me this bearish fair value gap. So I knew definitely that we are not going to go back here in no time. That's why I kept my stop loss just above the up close candle here. You might see that is an order block just above the up candle here. targeting this sell side liquidity right here. So bearish fair value gap here could have been your entry, and you sell short to this place. So it's just built from a framework of price has taken a 1 hour buy side liquidity, which is the previous day's high. That's Thursday's high. This Friday's price action. So we broke down. You see how candlestick closing below that breaker, but we did not have a bearish order block. Does this mean a no trade? No, it doesn't mean. You can still, it's still very tradable, but you need to reduce risk because this literally a low probability trade setup. So you enter a sell just at this point, trusting it to reach for the closest sell side liquidity, which is this sell side liquidity, and also this sell side liquidity here. You can trust that, but at every sell side liquidity you should be taking profit. So this sell side liquidity here, so you see that. So this was a beautiful trade here, but in this price action you should really be trading safe, right? So for those that are questioning fair value gaps and my PDRs, ICT PDRs, if this was really not a thing, why do you think that price will stay in this range for a very long period of time? Why? You see the reaction, the price behavior is predictable at this point when you understand what I'm trying to show you, and you can build a model very uniquely to you. You can build a model unique to you from what you're learning here in my channel, right? So if you put in the right effort to this, you're really going to see results in no time. That's what I can guarantee. I don't guarantee that you're really going to make any profit, like money is going to make you rich in any time soon, because you're really going to fight with a whole lot. You struggle with a whole lot personally from the inside, the person you are, right? So that will be it for today. Till next review, see you then. So for those that are new to the channel, please subscribe to the channel. We're building a strong community of traders that understand good narrative of price action, not just support and resistance, but institutional levels of how price should behave the way they behave. So we study how price behave the way they behave literally in this channel, right? So give us a thumbs up and subscribe to the YouTube channel if you really like what we are doing here. So till next time, have a lovely trading week ahead.